Hello everyone, welcome to the May 28th Thursday edition of the Market Opening Bell, your 10-minute guide to the stock market. The Hang Seng Index opened 9 points higher, but then retreated, remaining under pressure throughout the day. It ultimately closed at 25,328 points, down 271 points or 1.1%. Total turnover reached 320.7 billion Hong Kong dollars. The H-share index closed at 8,463 points, losing 113 points or 1.3%. The Hang Seng Tech Index closed at 4,907 points, down 39 points or 0.8%. Southbound funds recorded a net outflow of $7.717 billion from Hong Kong stocks, marking the fourth consecutive day of net selling. Among them, net buying included SMIC at $1.982 billion and Xiaomi Group at $806 million. Net selling included Alibaba at $1.858 billion, Tracker Fund at $1.828 billion, CSOP Hang Seng Tech ETF at $1.392 billion, Hang Seng China Enterprises Index ETF at $1.379 billion, Tencent at $1.122 billion, Hua Hong Semiconductor at $353 million, Yangtze Optical Fiber at $316 million, and CNOOC at $261 million. Statistics show that Southbound funds have bought SMIC for 8 consecutive days, totaling $10.139 billion. They have sold Alibaba for 5 consecutive days, totaling $6.955 billion. Sold Tencent for 4 consecutive days, totaling $5.503 billion. Sold Yangtze Optical Fiber for 4 consecutive days, totaling $1.458 billion. And sold the CSOP Hang Seng Tech ETF for 3 consecutive days, totaling $3.195 billion. Technically, the Hang Seng Index reached a low of 25,258 points, which has almost completely filled the upward gap from April 8th between 25,254 and 25,668 points. Support is expected around 25,250 points, while the rebound resistance levels are in order to 25,500 points, the 250-day moving average at 25,644 points, and the 50-day moving average at 25,760 points. The 3 major A-share indexes showed mixed performance. The Shanghai Composite Index fell 51 points or 1.3% to close at 4,093 points. The Shenzhen Composite Index dropped 139 points or 0.9% to 15,736 points. The ChiNext Index rose slightly by 2 points or 0.07% to 4,045 points. Total turnover in Shanghai and Shenzhen markets combined reached 3.24 trillion yuan. The renminbi central parity rate against the US dollar was set at 6.8291, down 3 pips from the previous day. The National Bureau of Statistics released data showing that in the first 4 months of this year, profits of industrial enterprises above designated size nationwide total 2.44 trillion yuan, up 18.2% year-on-year. This demonstrates strong resilience in the industrial economy's recovery. In April alone, profits grew 24.7% year-on-year, the fastest single month growth in nearly 2.5 years since November 2023. High-tech manufacturing profits surged 44.8% in the first 4 months, driven by the semiconductor and AI boom. Profits in electronics, specialty materials, optical fiber, and optoelectronic device manufacturing jumped 601.7%, 347.6%, and 51%, respectively. The electronics sector contributed as much as 43.8% to overall industrial profit growth. Equipment manufacturing profits rose 15.4% year-on-year, contributing 5.4 percentage points to overall industrial profit growth. reflecting strong demand for industrial automation and intelligent control systems. The National Press and Publication Administration announced that 154 domestic online games were approved in May, including Tencent's Chase Carado from its studio and NetEase Shadow Hidden Edge. Other approved titles include Sanqi Interactive's Battle Through the Heavens, Awakening, and ByteDance Chaoxi Guangnian's Zootopia. Additionally, 4 imported online games were approved in May. Hong Kong-listed lithium battery concept stocks rose collectively. CATL bucked the market trend to surge 6.4% to $700, becoming the best-performing blue chip of the day. News flow indicates that the wave of lithium battery capacity expansion has reached the upstream supply chain. According to incomplete statistics since May alone, lithium battery material companies, including Anji shares Defang Nano, Putai Lai, Yongxin Lithium, China Mineral Resources, and Changzhou Mingzhu have announced expansion plans totaling over 20 billion yuan. Analysts point out that these expansion announcements from multiple lithium battery material firms serve as confirmation that the industry is entering an upward cycle. This round of expansion is occurring against the backdrop of stronger than expected demand for energy storage and power batteries. Leading companies are benefiting first, but industry differentiation is intensifying. Overall, the expansion wave is viewed as a positive signal for Hong Kong-listed lithium battery stocks. Companies with technological and capacity advantages such as CATL, China Innovation in Aviation, and BYD are expected to further capture market share. Hong Kong-listed paper stocks mostly rose according to reports due to persistently high prices of raw materials and chemical additives. Nine Dragons Papers, Quanzhou-based, raised corrugated paper prices by 50 yuan per ton, starting May 22nd to 26. Recycled kraft liner prices were raised by 50 yuan per ton from May 25th, and Ground Dragon kraft liner prices were raised by also 50 yuan per ton from May 27th. The company successive price hikes for recycled and Ground Dragon kraft liner have lifted the price center for kraft paper products, providing moderate support to the kraft paper market. Overall, Nine Dragon Paper's latest price increases represent a proactive response to cost pressures and are being interpreted by the market as a signal of bottoming out and recovery in the industry. For the paper-making sector, especially leading companies, this constitutes short-term positive news that should help boost market sentiment and earnings expectations. Kuaishou released its first quarter 2026 results, showing a structural pattern of main business shifting gears, short-term profit pressure, but explosive AI monetization. The company reported total revenue of 33.7 billion yuan, up 3.4% year-on-year, in line with expectations. Core commercial revenue, including online marketing services and e-commerce related services, grew 10.7% year-on-year, offsetting the decline in traditional live streaming business. E-commerce GMV growth slowed to low single digits due to new tax policies at the end of last year and the macro environment. Clean AI commercialization accelerated further. In Q1 2026, Clean AI generated over 650 million yuan in revenue, up more than 300% year-on-year. As of March 2026, its annualized revenue run rate ARR approached $500 million, placing it among the very few global AI applications to reach this milestone the fastest. 60% of Kling AI's revenue came from enterprise professional users and 70% from overseas users. It has successfully entered high willingness to pay vertical workflows such as Hollywood film and television, advertising and gaming. Its 225 gross margin has already turned positive, showing strong scale effects. In February 2026, Kling AI launched the Kling 3.0 series models, further enhancing model capabilities, product systems, and application scenarios. Adjusted net profit reached 3.4 billion yuan, down 26.3% year-on-year, but better than the market's general expectation of around 2.4 billion yuan. This was not due to fundamental deterioration, but rather Kuaishou's strategic increase in investment in AI infrastructure, such as GPU computing power. The company expects full year 2026 capital expenditure to surge from last year's 15 billion yuan to 26 billion yuan. The sharp rise in depreciation and R&D expenses in the first quarter directly suppressed short-term profit margins. On the user side, Kuaishou's average daily active users reached 430 million, and average monthly active users hit 772 million, both setting new historical highs. In this quarter, the company continued to deepen its AI strategy. While accelerating Kling AI commercialization, it is also integrating AI capabilities into core areas such as commercial ecosystems, content ecosystems, and operational efficiency in its main businesses. Kuaishou's future valuation logic may shift from a traditional short video advertising plus live e-commerce company to an AI-driven technology enterprise. CSPC Pharmaceutical Group shares fell 5.4%, making it the worst performing blue chip. The company announced its first quarter results in the afternoon, which come in weak. Revenue total 6.465 billion, down 7.83% year-on-year, slightly below the market expectation of 6.59 billion yuan. The main reason was licensing income of only 146 million yuan, a sharp 79.7% drop from 780 million yuan in the same period of 2025. Finished stock business revenue was 5.224 billion yuan, down 5% year-on-year. Excluding licensing fees, pure product sales revenue actually grew 6.2% year-on-year and achieved sequential recovery for the third consecutive quarter. Due to global oversupply and low prices for vitamin C and antibiotics, raw material product revenue was only 796 million yuan, plunging 25.7% year-on-year. Profit attributable to shareholders was 860 million yuan, down 41.8%, with earnings per share of 7.54 cents. Excluding licensing fee fluctuations, core profit attributable to shareholders was 736 million yuan, down only 7.3% year-on-year, indicating no fundamental deterioration in core operations. Damai Entertainment, formerly Alibaba Pictures, released its fiscal year results ended March 31st, 2026, achieving strong double-digit growth in both revenue and net profit. This was mainly driven by the booming development of China's live entertainment sector and the company's diversified business layout based on its reality entertainment strategy. Revenue reached 8.024 billion yuan, up 20% year-on-year. Entertainment, performance content, and technology business revenue was 2.276 billion yuan, up 11%. IP derivative business revenue was 2.17 billion yuan, up 60%. Drama production revenue surged over 100% to 1.401 billion, with segment profit doubling to 151 million yuan. Film content and technology revenue fell 20% to 2.178 billion yuan, but segment profit jumped over 100% to 310 million yuan, thanks to high ROI hits during the 2026 Spring Festival, periods such as Ride On and Silent Awakening. Net profit attributable to the parent was approximately 705 million yuan, up 94%. Adjusted EBITDA remained profitable for the sixth consecutive year. Kingsoft Cloud released its first quarter results with revenue growing 37.2% year-on-year to 2.7 billion yuan. Public cloud revenue increased 47.5% to 2 billion yuan. Intelligent computing cloud billing revenue reached 1 billion yuan, up 90.1%, accounting for 50.1% of public cloud revenue for the first time. As the sole strategic cloud platform in the Xiaomi Kingsoft ecosystem, intra-ecosystem revenue reached 840 million, up 68.9%, representing 31% of total revenue. Although performance exceeded expectations, high AI infrastructure spending of 3 billion yuan continued to pressure gross margins in the short term. GAAP gross margin was 12.8%, significantly down from 16.2% in the same period of 2025. Management guided that full year 2026 capital expenditure will remain high at 15 to 20 billion yuan to build a strong AI moat. CFO Li Yi stated that as newly signed customers gradually enter the revenue contribution phase in the coming quarters, gross margins are expected to recover quickly to normal levels. The market is once again optimistic that the Middle East conflict could soon end. U.S. crude oil fell below $90 per barrel, while the three major U.S. stock indexes all hit record highs. The fear index VIX fell 0.72 points or 4.2% to 16.29. The Dow Jones rose 182 points or 0.4% to 50,644. The Nasdaq rose 18 points or nearly 0.1% to 26,674. And the S&P 500 edged up 1 point or 0.02% to 7,520. The Nasdaq Golden Dragon China Index, which tracks Chinese concept stocks, climbed 68 points or 1% to close at 6,618. Of the 11 U.S. stock sectors, 6 declined. Energy led the losses, while consumer discretionary stocks led the gains. Among the key stocks, Micron, which has received bullish calls from multiple major brokerages, rose another 3.6%. Meta launched its first AI chatbot subscription service for consumers, sending its share price up 3.7%. Some chip stocks pulled back, with Nvidia falling 1% and Qualcomm dropping more than 6%. According to sources, Qualcomm has reached an agreement with ByteDance, the parent company of TikTok, to supply chips for AI data centers. ByteDance reportedly plans to purchase millions of Qualcomm chips and is expected to become one of the major initial customers for Qualcomm's first batch of AI-specific ASICs. Qualcomm had previously stated that it was actively seeking customers for these chips and was in discussions with multiple companies. JP Morgan Chase bucked the market trend and fell 2.4%. CEO Jamie Dimon said the bank's expenses this year may be closer to $106 billion, $1 billion higher than previously forecast. ANF reported first quarter earnings that beat expectations and posted record sales for a clothing retailer, driving its share price up 8.9%. Pinduoduo saw first quarter profit unexpectedly decline year-on-year, with revenue also missing market expectations, causing its share price to drop 10%. Our stock pick today is NetEase, stock code 9999. NetEase announced its first quarter 2026 results with operating revenue gross profit and net profit attributable to shareholders, all exceeding market expectations. The key highlights were the resilient performance of its core gaming business and its significant improvement in gross margin. The market is optimistic about the company's new game cycle in the second half of the year. The group reported first quarter net revenue of 30.6 billion yuan, representing a 6.1% year-over-year increase and surpassing the market expectation of 29.51 billion yuan. Gaming and related value-added services generated net revenue of 25.7 billion, up 6.9% year-over-year and 16.8% quarter-over-quarter, beating estimates of 24.71 billion yuan. Online games accounted for approximately 97.5% of this segment's net revenue. The increase in online game revenue was primarily driven by high contributions from self-developed titles such as the fantasy Westward Journey and Where Winds Meet. Several classic games maintained strong player activity and revenue performance through frequent content updates and gameplay innovations, including the fantasy Westward Journey, Identity V, Eggy Party, Sword of Justice mobile version, and Where Winds Meet. Innovative and other business recorded net revenue of 1.55 billion yuan, down 4.6% year-over-year against an estimate of 1.58 billion yuan. NetEase Cloud Music revenue rose 6.6% to 1.981 billion yuan, while NetEase Youdao revenue increased 3.8% to 1.3 billion yuan. The group's gross profit for the quarter reached 21.2 billion yuan, up 14.8% year-over-year and well above the expected 19.11 billion yuan. Overall gross margin climbed to 69.4%. Non-GAAP net profit attributable to shareholders was 11.3 billion yuan, a slight 0.34% increase year-over-year, but significantly beating market expectations of around 10 billion yuan. Adjusted earnings per ADS from continuing operations stood at 17.46 yuan, exceeding estimates of 15.47 yuan. NetEase is continuing to deepen its global market expansion. Popular titles such as Where Winds Meet and Marvel Rivals are steadily growing their international presence with improving player engagement. Localized content for Blizzard series games is being updated consistently, maintaining stable operations in the Chinese market. The highly anticipated open-world anime style game Ananta is progressing steadily, while the major new sailing-themed title, Sea of Remnants, will commence its third closed beta test on May 28th. The market generally expects this game to serve as an important new growth driver for NetEase in the second half of the year. Recommendation suggested buy-in price at $192, with first target at $203, followed by $209. Stop loss at $183. I do not hold the above stock.